Hey gang, this is Carl White, and I am coming to you broadcasting here in the studios today, and you're listening to the Author Showcase powered by the Scotsman Guide. And this is where we interview the authors that write the articles for the Scotsman's Guide. And we do both the commercial side and the residential side as one is released each month. And this month, we have Mr. Tom Davis, who wrote a great article that talked about, I'll let you tell what it's about, Tom. So Tom, out of Fort Lauderdale, Florida, the October edition. Take it away, brother.
Thanks, Carl. Thanks. Yeah, thank you for having me. Yeah, so the article was about DSCR loans, which are debt service coverage ratio loans. The piece was focused around investment properties and how to finance investment properties. And so if you just look at year to date, approximately 26 to 27% of the purchase transactions year to date have been investment properties. And if you look at
Tom, let me stop you there just a second. I was just floored by that number. I found the article very interesting, frankly. If you want to go read it, which I strongly recommend people do, is Invest in Your Future. Invest in Your Future is the name of the article. So I had no idea that many homes were bought as investment. And you said, what was it again? 20, I think it was 27%. You said, is that like, what was it 5 years ago? Like that number seems incredibly high, or is that kind of typical?
That number was actually lower, let's call it 5 years ago. Then COVID happened. There was a migration. People started buying second homes and investment properties. And so you've seen, an increase in investment properties, to great hedge against inflation. There's tax benefits and, real estate. Every night when you go to bed, you put your head on your pillow. That's called real estate. And so
I just would never have guessed it'd be anywhere remotely close to 1 out of 4. I mean, that's a high number.
Yeah, it is a high number. So if you look at the purchase just market, or just originations in general, right? And you go back to 2021, which was an all-time kind of record. The market was 4.4 trillion. 72% of the market was refinance transactions. The other 20+% were purchase transactions. Well, 2 years later, you have a market that's at a 1.7 trillion, 1.6 to 1.7 trillion. So the originations are down 60% over the 2 years because of the rate environment. And the transactions, the share count or the market size purchase is up significantly. It's about 75%, and refis are in the 20s now. So if you're an originator, right, you got to focus on the purchase money side of the business because it's the majority of the market, 70+%. And of that 70%, 25 to 27% is going to be investment properties. Now, there's certain states like California is actually at 34%. That's the highest in the country. Texas and Georgia are in the lower 30s. Where I'm at out of Florida, I think it's 29. So there's certain markets that are higher than others. It's definitely, we've seen a growth there. And it's a great opportunity, a great product, to help, to purchase real estate for investment properties.
It just blows me away. I had no idea it was that big. And so I'm a branch manager, one of the largest branches in the nation, where we do hundreds of loans each month. And man, I'm embarrassed. Maybe we might edit this part out, right? But I'm embarrassed that out of the hundreds of loans, I don't know if. I think we're really missing out on this because nowhere near 25% of our purchase loans, nowhere near that, were for investors. So I think this is an area that not just myself, but probably most loan officers or mortgage companies, mortgage brokers might be very well missing out on. Let's backpedal just a little bit. So DSCR. So tell us again what it is and kind of give us a little bit of what exactly is it in case somebody's hearing that term for the first time.
So debt service coverage ratio, it's basically a cash flow program. The property or the loan is qualified by the cash flow of the properties. So let's say the payment all in is 1,000, but your rent is over 1,000, let's call it 1,001. So your ratio, you divide those two, the ratio is actually over a one. So it's it qualifies over one. So you're basically qualifying the property off the cash flow of the property. You look at the appraisal, what the appraiser says the market rents are, and you go off that number, and then you determine what the payment is, PITI, taxes, insurance, you lump that in, and you just divide the rents divided by the payment, and that's how you qualify the property. It's really like a commercial kind of transaction. We're just looking at the cash flow. We don't require, you don't need to qualify the borrower off that what is it called, off their personal income.
Right. So it helps with the debt to income ratio.
Yep.
That's where this seems to shine. Now, if I go do it, like when we're marketing this to the consumer, do I, as a consumer, do I need to show how much of a track record do I need to show that that I'm a successful landlord and I've been managing properties for X amount of years? How does that work?
That's a great question. We can work with first-time investors as well as all the way to professional investors. With our program, we could actually go up to $10 million exposure for one borrower. And we also allow allow for LLCs to close in the LLC. So we could actually be originated in the LLC in the company's name and close in an LLC. So with that product or the DSCR offering, you can actually target first-time investors, Carl, and then you could also target your, let's call it professional investors. And so you named it, if you're not seeing 26% of your production in your branch, then there's ways to think about, okay, how do I target this market, right? That's what non-agency or non-QM allows you to do. It allows you to serve the underserved borrowers. And so you have to start thinking about, that market and how you could tap into that. And we help you with that and give you ways and ideas. But look, there's over 19 million investment properties in the United States that account for 49.5 million units. Of the 19 million properties plus 19.5 million, approximately 18.3 to 18.5 are 1 to 4 unit single family to the 4 unit properties. So there's a ton of opportunity. There's just like, there's agency borrowers, there's non-agency borrowers in every town. There's investors in every single town in the United States. How do you tap into that market? There's plenty of ways to do that. We could talk about that if you like as well.
Very interesting. So I can use this for, I could be a brand new investor, right?
Yep.
And I can do this on either single family residences or up to a 4 unit, correct?
Correct. And up to a $10 million exposure for one borrower. Correct.
Does and how does condos and townhouses, are they open for these two? Any limitations on that?
Yeah. So we allow for condos, we allow for townhomes, we allow for non-warrantable condos as well. So there's pretty much all properties are allowed for DSCR except some of, like a berm home or something like that. But your traditional, properties that you're originating through the agencies, those are the properties we're looking at.
Now I'm getting ready. I'm in the process of doing one of these myself. Can we use the DSCR loans for if I'm doing a 1031 exchange to buy the property? Does that can I use a DSCR loan for the home I'm buying using a 1031 exchange?
Yeah, we allow for 1031 exchange.
Very interesting. All right, so let's talk about my favorite thing to talk about, which is the marketing of it. Right, I love the marketing. So I love things that help me help more families, and then helps my family, through closing more loans. So who do I partner with, or who do I need to get this information about this type of loan to, so that they'll start referring to me so I can help more families, i.e. close more loans? Who's my target?
I always say, start talking about it to everyone, right? If you're an originator, I would definitely start with your realtor base, right? In that network, realtors, many of them are investors and they want to buy more investment properties. and they also know other investors. So that's a great place to start. If you spend time with realtors, if you'd be interested, it's kind of interesting. A lot of the realtors will want to do that loan and leverage that loan. So it's not, you're not asking the realtor for a deal. You're actually providing a solution to them, and then they'll send you their own personal loans, which is interesting. We have many clients that do realtor lunch and learns and present to realtors, and their target is the realtor, not even going out and finding borrowers. They just target realtors and educate the realtors, and those deals, those webinars and lunch and learns turn into deals. Another place to start is I would go to your local RIA, Real Estate Investment Club. Those are great places. There's professional investors, first-time investors, private money. There's hard money investors, and the hard money needs a takeout, so the DSCR loan is perfect. If someone is purchasing a loan and they're doing a fix and flip, and they want to take the end loan out with the DSCR loan, that's great. But that's a great place to go on a monthly basis to the local Marriott or Hilton where they're having these clubs, and get to know the investors. Actually, where you're located, I believe in Tampa, there's actually 2 or 3 on the West Coast. By in South Florida, there's about 5 of them. So we always recommend originators go there, become the cash flow or DSCR expert, and master the product, because it's a untapped market, and it allows you to differentiate yourself from your competitors.
Yeah. So how long are these brother? I think the investment club would be, I think it'd be a home run for those guys. They've been looking for stuff like this for as long as I've been in the business. Yep. How long have the DSCR loans been in existence? Is this a new thing?
Well, you've seen them with the banks and private lenders. It's just qualifying off the cash flow. Actually, the Deephaven was a pioneer in the non-agency or non-QM space back in 2012. We helped bring capital to the market, and we're instrumental in actually developing the DSCR loan. So it's been around, at Deephaven since 2012. But you've seen banks, that have portfolio programs and private lenders. They just, just like traditional commercial, they're just relying on the cash flow of the property to qualify. So yeah, it's not something that's really new, but you're getting a lot more attention. Originators outside of the agency side, right, and focusing on that with production being down, originators need more tools to compete, to retain talent, to differentiate themselves with their realtor base, to tap into new realtors and drive those relationships. And the DSCR is a great product to do so. And so it's to give you an idea, in the non-agent or non-QM space, it's about 35% of overall production in non-QM today.
I would have never guessed it was that. I mean, I've always seen the need for it, but it just seems like recently this has just become I'm just hearing it all over the place, and it's kind of big news. Is there something going on, like with the I don't know, the way the economy is now, with a lot more people renting, and the prices of homes obviously increasing over the last few years pretty dramatically. Has that spurred more interest in this?
Yeah, I think on the investor side, investors want, properties that are going to cash flow. And if you look at just the characteristics of a DSCR, on average, it's like a 70 to 75% LTV. The property cash flows, so the investors like that. Also, one thing that investors like is, look, there's an undersupply of housing in the United States by like 5 to 10 million units. So there's not enough property out there, and there's a supply-demand imbalance. As we all know, the vast majority of borrowers that own or folks that own homes that have a mortgage or have a rate that's lower than the current rate environment. And so there's kind of like a seller strike that's going on. No one wants to move out of their home in the 2s and 3s, right? So properties aren't coming on the market, and rates where they're at, it's hard for folks to actually afford homes. So There are some challenges in the market, but the investor space, it continues to remain bullish because of the supply demand imbalance. And we've had a migration. Close to 40% or 40 million people in the United States were not born in the United States. And if you look at the home builders, when COVID happened, they stopped building homes. So between the migration and the home builders, kind of pumping the brakes during COVID, that has increased that supply demand imbalance in housing. And so there's always a need for real estate, and investors really like the appreciation of the properties and the cash flow, and they've been great investments over the last, let's call it, 5 to 10 years for
Yeah,
investors.
just seems like a remarkable opportunity. Now, I know you mentioned a couple of areas or a couple of states like
Yep.
Florida and California. Are there any notable like cities or other regions where DSCR loans are making a significant impact?
Yeah, I would say for the most part, the coastal, the large metro areas, you're seeing the Florida, the Georgia, the Carolinas, California, Arizona, are the bigger states for DSCR loans and investor loans. I would say where sometimes you run into issues on the cash flow of the property is in states where properties have really appreciated in value. And, with that payment, in the current interest rate environment, the property might not cash flow. So sometimes that could be an issue. There are certain markets that have short-term rentals markets that are, that just have a higher cash flow versus a long-term rent. So we're seeing some of those markets continue to do well. But overall, once again, there's investors in every town, and there's need for housing, and there's once again the supply demand imbalance. And so we continue to see that market across the United States continue to remain strong.
Now, you just mentioned something that I didn't even think about until just now. Are there cases where we can use Airbnb income properties for this type of loan also?
Yeah, we can look at the short-term rental. We can look at the history of the short-term rents to determine if we could use it. But yeah, there's each property, each location, geocode, or city is going to be a little bit different. Some areas like in South Florida, you just tend to have more folks, visit, from out of the state in the winter. So short-term rents might work. Maybe in Tennessee where there's, you have, homes in the mountains and people go to rent, those properties, or beach towns, right? So that's where you're going to see maybe Orlando, where you have, the theme parks. There's a lot of visitors and travelers that come in and out of there. So that's where you see really where the short-term rents, tend to work or are more favorable than, a town in the middle of, let's call it, Georgia, where it's just a smaller rural town. You just don't get a lot of visitors. The short-term rents might not work there.
Get it. Yeah. So the good old I was going to insert in name of a city, but sure as the world, somebody be listening lives in that town and go,
That's
hey,
right.
This is a nice place, right? So
yeah.
But I get what it sounds like. This is one of those very elusive, common sense type of loan products, which boy, it's a great idea. Hey, Tom, for somebody who wants to hear more get more information on these types of loans, number one, would refer them to the October edition of the Scotsman Guide. And again, the title of the article is Invest in Your Future by Tom Davis. Tom, you work over at Deephaven Mortgage. Do y'all have additional information over there?
Yeah, just go to deephaven.com, Deephaven Mortgage. On our website, we also have webinars where you could actually sign up for one of our upcoming webinars. We have a lot of webinars with different folks from our industry, to chief economists at the National Association of Home Builders, the Mortgage Bankers Association. So just trying to always keep our customers up to speed on what's happening in the market, and we cover a lot of these things through that. If you're looking to tap into the DSCR space, or just non-agency, and you want to build a competitive advantage in your marketplace, we do a lot of one-on-one training around our products, how to leverage the products, where to source, where to find these investors and target those, 26% of the purchase market. We also have white label marketing as well. So if you need flyers, you could just put your NMLS and logo onto those flyers. So we have all the resources we can look at. We have a scenario desk that can look at those transactions and the appraisal and credit qualify for you. So just go to deephavenmortgage.com and connect with us there.
Outstanding. Well, Tom, looking forward to future articles in the magazine, Scotsman's Guide. So thanks for being here today. And brother, thanks for some absolutely outstanding information to help our listeners have another arrow in their quiver, another tool to help more families close more loans. Thanks a lot, Tom. Great seeing you, buddy.
Thank you very much, Carl. Have a good one. Take care.
All right. And for our listeners, thanks so much for hanging out with us today. And myself and Tom and the great group over at the Scotsman's Guide. The only thing we ask in return is, boy, we love those 5-star reviews or just an honest review. So whatever platform you're listening this on, whether it's Stitcher or iTunes, YouTube, wherever you might be watching it, if you could give us a review, we really appreciate it. And forward this to 3 of your favorite loan officer friends. They'll thank you for it. And certainly I will too. So on behalf of the gang over at the Scotsman's Guide, my name is Carl White, and I'll see you on the next episode of Author Showcase. Thanks again, everybody. Bye-bye.